let's go through kind of like a case study of, we'll go through a scenario where kind of someone who is over this amount does nothing and they want to leave it to their children, but they don't give anything until they pass away. They gift something now before the end of 2025, and they gift after. Peter, want to kind of talk us through this kind of case study and the scenario, the context of it, and then we'll get into kind of what the meaning of the results are.
Yeah, so the context of it is we have a person named Anne. She's 50 years old, unmarried, has a child, and lives in New York City. And she has a $25 million net worth, and she wants to leave her wealth to her child when she dies. And she's worried about the estate tax, as she should be. And so Anne comes to you and she says, should I make a gift in 2025 or should I wait until 2026? What's the difference really between making the full $14 million gift in 2025 versus making the $7 million gift in 2026? And so we ran the numbers for an intentionally defective grantor trust. The numbers change depending on the type of trust, but we don't have to get into that. But basically, so if Anne lives 40 years, so this is assuming Anne lives to 2065. If Anne lives to be 90, and she doesn't make any gifts, she'll be able to leave her child $148 million. And so that's assuming $25 million grows at a 9% pre-tax annual return, about a 6.5% post-income tax annual return.
And just to call this out, because I'm sure there's a lot of financially inclined folks here, this is after those gift and estate taxes that Peter's mentioning with that growth rate. So this is after kind of everything that she loses.
Exactly. So it grows to close to 300 million, and then it gets cut in half by taxes. So New York State has its own estate tax, and the effective estate tax rate in New York State is basically, it's really 49.6%. So so in the no trust scenario, she winds up leaving $148 million to her child, which is a lot. But if she'd made a gift in 2025, the $14 million gift to intentionally defective grantor trust, she actually would have left closer to $300 million to her child. And if she'd made a gift in 2026, a $7 million gift, she would have left $234 million to her child, which is better than the no trust, but obviously a lot worse than making the gift in 2025. And by the way, this is assuming no valuation discounts, and it's not accounting for some of the other factors that could make these numbers actually bigger. And so these are actually pretty conservative figures for the situation.
Yeah. And it sounds a little bit weird to say, right? But in a conservative world where essentially you gifting this money now before the exemption changes can essentially enable an individual to pass on $100 million more to their family. It sounds kind of crazy to say. Now, one thing to call out is, so I'm sure some folks on here have used our calculators. We do have a calculator that actually runs through all these numbers. We're actually releasing it in August. So we'll share updates with that, but you'll actually be able to not only see the impact of these numbers in these different scenarios, but also Peter's kind of mentioned this, and we're not going to talk about it now, but there's a number of different estate planning structures and irrevocable trusts that people use. You'll be able to see how these numbers change in these different scenarios to better understand this. And we're also always available you can set up calls with us to better understand this, better understand these structures and how to use them. So, I mean, the real call out here though is just how important it is, one, to do estate planning. If you're worried about the gift and estate tax, it is, literally $100 million decision. And also the value of doing it. There's this unique window before the exemption lowers, right?
Yeah, exactly. And it's just, I think the big takeaway from this is really it's not just about the importance of using the gift tax exemption before it's cut in half. It's also just the importance of estate tax planning in general. As Monty was saying, these numbers are conservative. The numbers in general for estate tax savings are enormous. And a lot of the strategies, you end up saving both estate tax and income tax, or at least state income tax. And so, especially for people in higher tax states, you can really save. You can more than double the amount of money going to your children using these strategies, especially if you have more than a decade or so to plan around.
Yeah. Now, hopefully, kind of really the takeaway is if you're planning to gift money to future generations and you have or will plan to gift more than 7 million, the value is starting to do it soon.